Padalkar joining us now, MD and CEO HDFC Life Insurance. Vibha, thanks for being with us. Now, despite the overall sluggishness in the economy, life insurance companies continue to report strong growth. What, according to you, is holding this growth? Are you seeing the current slowdown impacting you in any way?
I think that the market realizes a couple of things. One is that insurance companies have a much longer horizon in terms of everything that we do. And so most of our assets are held to maturity as against expecting to give a short-term return or a lot of short-term focus. Because longer term, the fundamentals of Indian macros are pretty strong, and worldwide we are seen as a very strong emerging market. So nothing's changed as far as that is concerned. Second is that the product innovation, especially the private sector life insurance companies, including HDFC Life, have been known for, especially in the last 5 years or so, means that the understanding of what insurance products can offer, which are different from only investment-related insurance products as it was known earlier, is becoming more and more apparent. So protection is something that insurance companies are beginning to focus on, and we've been the market leaders in that space. So again, what the consumer is looking for when he or she comes to an insurance company is not only an investment-led product. So that's the second point. Third point is that the regulator has done a good job in terms of ensuring that there is adequate risk management. There is a lot of conservatism that is built in how we manage our investment book as well as overall reserving practices, because these are very long-tailed assets that we hold, and also the liabilities are longer-tailed. Even after the Lehman crisis, this is going back 2008 and thereafter 2009, insurance industry in India, touch wood, came out relatively unscathed. And this is again, we are seeing this for the second time, and we expect the industry to grow from strength to strength despite all the macro level volatility that we are seeing.
Private companies have reported a strong growth in new business premium. What's the market share you're eyeing in this competitive landscape currently?
HDFC Life has always believed in the principles of strong growth and strong profitability. Market share is an outcome. Reason we are not only focused on market share is because we do believe that sometimes it leads to a lot more short-term focus on perhaps not so good quality business. So we will continue to beat overall industry growth, but not necessarily be too fast on whether we are number 2 or number 1 or what is the numbering in terms of profitability and as well as market share.
Right. Vibha, you reported very strong growth in VNB margins in the first quarter. What is your outlook on the margins, and also do you believe such high margins are sustainable in the long term? Would you agree with that?
Over the long term, yes. No reason why, with the continued focus on protection, and this is all three tenets of protection, mortality, morbidity and longevity, we should inch upwards, taking a leaf off China's books. It will take some time, but the continued upward trajectory should continue. In terms of your question, we have mentioned that the first quarter was very robust margins of just shy of 30%, and this was on the back of a lot of focus on our non-par product, which is Sanchay Plus. However, on a full year basis, this will straight line somewhat. It will certainly be higher than where we ended last year, but nevertheless rationalized. And this is again because we do believe in a balanced product mix, and you will see us exiting the year with a non-par portfolio in the range of about 35%.
Right. Vibha, you've maintained that you are open to inorganic growth opportunities. What is the nature of opportunities that you are looking at, and any progress made with Max Life?
We do continue to be interested in evaluating opportunities that come our way. We do have a currency and a strong balance sheet, but we will do this in a sensible manner. We will want to be assured of what is it that comes to the table and what are we acquiring. This would have to be a strong distribution franchise, as well as the quality of book that the particular seller entity has written needs to be of a high quality. Only then will it unwind to profits down the line. So we would be cautious. As regards Max Life, nothing on the table right now, but we continue to remain interested.
What's your broad strategy for growth? Which areas will you be focusing on in FY20?
Quite a few elements. One is that continue to forge ahead through all our channels. So if you look at in Q1, our agency channel grew 121%, our bank assurance grew upwards of 45%, our broker channel grew 3 times, our online channel close to doubled. So we want to be firing on all the channels. That's number one. Second is that we want to continue to be known as a product innovator, and we have a few in the pipeline, and we are hoping that end of Q3, there are some more blockbuster products that we can take to market, which will be first of its kind. That's the second part. Third is we are known as a technology-focused life insurer. So on that part as well, we have mentioned in the past that we've tied up with Ivy Camp, and we're looking at under our Futurance umbrella, we're looking at whole host of startups that can work with us in order to look at use cases, work out a proof of concept, and then for us to roll out in whether how we go to market, how we mine data, how we do risk management, the entire gamut. And we have 150 bots that are currently on. So continuing to forge on the technology platform. And fourth is how do we look at offering whole host of adjacencies. So whether it's in the pension space, whether it is in the life space, how do we go to the customer wherein there's a meaningful manner in which we can engage with him on adjacencies that touch life insurance but are slightly different. So we're looking at it from an end-to-end platform. And finally is in forging ahead in the new ecosystem, such as the recent tie-up with Airtel, and we have more conversations that are happening with the new ecosystem partners that have a very huge customer base who haven't really thought that they could sell financial services products through their own channels, and that also excites us in along with bite-sized insurance, episodic insurance for us to go to market with.
It's been a pleasure chatting with you. Many thanks for taking time out and joining in, giving us a view as to how business is shaping